I've been wondering, let's say it takes off and it just goes parabolic and there's no incentive for anyone to let go of any of it. It's just, right? Why would you? Every time you do, you lose money. And so you get into that mindset. And then, in a way, it's from a monetary policy point of view, in terms of managing the economy globally. You're off the rails. You have to figure out a way to get to a price rule. And so I have wondered. I think the answer is absolutely not, because I have met with the core developers, and I know how strongly they feel about the quantity rule here. But can you imagine any circumstance where, Bitcoin actually loses its usefulness in a sense? Nobody wants to use it for anything. They just want to hold it. And, what happens then, right? If you're trying to manage an economy around Bitcoin. I understand why Bitcoin went from 19,000 on March 13th, the week after the weekend of Signature and Silicon Valley Bank basically going into receivership. It was a flight to safety, 19,000 to nearly 28,000. That boy was that proof of concept right there: decentralized, transparent, auditable, and so forth. So we are on the same page here. I worry that this economic downturn, this deflation, is a much bigger problem right now. And I do. If you're going to say, well, they're just going to throw money at it, we just saw that the Fed raised interest rates for the first time ever in the middle of a crisis, and today, this week, they've been talking once again about the need to increase interest rates at the next meeting. So I don't think they respect market signals. And this is a big problem. They are not looking at market signals. They're looking at massively lagging and unreliable indicators that are based on, in a world, the statistics came from the industrial age. So they're not even looking at the right numbers. Pricing signals are the most important signals right now: credit default swaps, interest rates, yield curves, right? Bitcoin, yes, I agree with that. But I think you might have your hyper inflation of Bitcoin. And I think what we're coming to, you seem to be nodding when I say what I'm saying about the banking system and the risks to the economy. It's not going to be inflation. It is not going to be inflation that we're worrying about this year. It will be something else. It may be counterparty risk, but I don't think it's going to be inflation in the prices of goods and services. And many people will say, "Oh, the dollar is going to collapse." Well, the dollar is measured. If you're measuring it in terms of prices and goods and services, right now, it's going up if you're looking at commodities, right? The dollar is appreciating. If you're looking at it in terms of other currencies, after a 25% run in a very short period of time, it's come down. But at the same time it's come down in the last few months, commodity prices have come down. So what does that tell you?
Well, so here's the thing: is as I said, I don't have given the gyrations in the economy that they're hiking rates while printing trillions. I don't have a strong thesis on essentially the ratios of different variables within this economy that's being manipulated in crazy ways. But I do want to show you something, which is this is sort of micro data that is, I don't say it's contrasting to your points on the velocity of money, but at least it's something that you can actually see from a very bottom-up standpoint. So this is like the, assets and deposits are, kind of moving together. And Pilkington was looking at, that ratio and shocks to that ratio. And he's finding that this last week was, the highest ever change in the asset deposit ratio. And all the other events were like, financial crises and whatnot. Okay. Which I think is an interesting way of thinking about.
This deposit's going down, right? The asset pace doesn't change that radically.
he's giving a different lens on this to show how exceptional this is, right? Like, is this a big deal or not?
First time since the 1930s.
That's right. And so essentially, one way I kind of think about this whole thing is, how many economists said Bitcoin couldn't exist, Bitcoin violated the laws of economics as they knew them. All these Nobel laureates, Keynesians, lined up to denounce Bitcoin over the last 10 years, right?
Mm-hmm. Not Art Laffer. Not Art Laffer.
Let's say, sure. And Milton Friedman and others. I'm not saying Milton Friedman predicted Bitcoin and so on. There are good economists, but a large number of Keynesian economists denounced Bitcoin, said it couldn't exist, shouldn't exist. Yes, right? Okay. So their theory does not account for the existence of Bitcoin. It says that something gold-like cannot exist. Now, have you ever seen like an MRI machine and you're not supposed to have a piece of metal next to it? Like the operation of the MRI machine depends upon there being no metal nearby. If there is a piece of metal nearby, that field, it will fly around in very unpredictable ways and smash the whole thing to pieces, okay? And in the same way, the fact that a digital gold-like thing now exists is something that they did not predict could exist. And this generation of Keynesians has, unlike the guys who set up the Federal Reserve at the beginning, where they knew they had to defeat gold, like the so-called Executive Order 6102, right? The early generation of Keynesians, right? They actually, had guys with guns who went and basically said, "Hey, give me all your gold." Where private ownership of gold is not allowed, right?
Remember that? I mean, I remember the history. I wasn't there.
You remember the history? That's right. Yeah. Neither of us were there. Right. So the thing is that the people who set up this centralized system, almost 100 years ago, 90 years ago, they were aware that gold was a competitor to them, and they took gold very seriously, and they had to actually defeat gold, right? Now, this group of people truly doesn't take digital gold seriously. Digital gold is a V3, while physical gold, in my view, has been defeated by the state. And fiat does actually improve on physical gold in some ways, in the sense of it's electronic and it's programmable and so on. Bitcoin and cryptocurrency in general is like a V3, which incorporates aspects of both V1 and V2. So Bitcoin has not yet been defeated by the state. And the interaction of digital gold with this economy over here is like, this MRI, and there's this piece of, metal nearby that its theory does not account for. And so when you have this huge cloud of assets, right, all of this money that's super liquid now because of the digital bank runs, because your home is being set on fire, your bank account in your bank that you had for 40 years, Silicon Valley Bank, goes to zero, because all the tech elites were told that they're idiots for keeping their money in an American bank, right? Just think about, by the way, what that means. I don't think people realize the extent to which that reverberated overseas. Every Indian founder that I know, okay, has been like, oh my God, the US banking system is not trustworthy, okay? What an insane update.
Yeah, I understand. And to make matters worse, just to give you a sense of what investors in banks are being told, the president on that Monday, March 13th, got up and said, the depositors, your deposits are secure. We want you to know that. And the people responsible for this are going to be fired, any decision maker, and any equity or bond investor is going to be, he used these words, wiped out. What kind of message is that? But we probably should wrap this, and I actually have an interesting way of doing that, because during my discussion with Art Laffer last week, we were talking about Bitcoin, and he said, we really need to add, in terms of trying to figure out what's really going on out there in terms of the money multiplier, add Bitcoin to the monetary base, and we'll get a better picture. So he's already thinking in this way. And I was so happy that he said it. Half of the solution is understanding a problem and understanding how we should try and frame things to understand what's really going on out there. So this idea of adding Bitcoin, which is a little over 500 billion, to the 8.5 trillion in the monetary base, it was a start. And a start of a conversation, because we do have to deal with the world we're living in. The one you're talking about, I think will evolve over time, but it doesn't happen overnight. You might say the banking crisis is giving us that opportunity, and I think it may happen faster than otherwise might have been the case. But I am going to continue paying attention to market signals. I see credit default swaps settling down a bit. We haven't seen the regional bank index break down again, but it hasn't V-shaped either. So I think that's a risk there, that there's another episode.
So I think we're agreed that basically in the flight to safety, people will choose Bitcoin. Whether you call that contraction and people feeling the flight to safety, whether you think of it as inflation in the sense of the Bitcoin price going up, that is the one number that they can't fake in the system. They can hike rates while printing trillions, but they can't change the amount of Bitcoin. And that hard denominator constrains them, and it's visible to the whole system. Plus, it's a global asset. Plus, it's hard to seize. Now, one last thing I want to talk about, like from a hope standpoint, okay? You mentioned that Florida might do state-chartered banks banking crypto, right?
It's a rumor. There are a number of states, the Dakotas, and Florida among them, the states that are trying to attract capital and labor.
Absolutely. That's right. So all these regional banks are getting killed and so on. And in a sense, there's a real deviation of interest between state and local versus the feds, right? And so what I think could happen is bitcoin.florida.gov, bitcoin.texas.gov, bitcoin.mississippi.gov, and bitcoin.montana.gov. All of these states, which, Texas GOP has passed something where it has in its platform the right to buy, sell, send, and receive Bitcoin shall not be infringed. The mayor of Miami takes a salary in Bitcoin. Mississippi and Montana have Bitcoin mining protection bills. Wyoming and Tennessee have DAO bills, right? So lots of these red and purple states. Colorado accepts taxes in cryptocurrency. New Hampshire is pro-cryptocurrency, right? Lots of these, let's say, red and purplish kind of states or pro-freedom states are pro-cryptocurrency. And if they reopen the gold window, okay, if you had bitcoin.florida.gov, bitcoin.texas.gov, where it's like basically a very simple exchange. It's like Coinbase circa 2013. You can buy, sell, send, and receive Bitcoin. You can place limit orders. You've got a fiat USD BTC order book. That's it. And it's set up for you to just take your Bitcoin off the exchange within, a few days, or right away, ideally. It's not meant to be something where you hold it there. They just keep pinging you to take it off, right? And then what happens is the state just takes a cut of that. So they're now accumulating a digital gold position, okay? Why is this important? Why do I think of this as a positive development? Well, first is, DeSantis and others have come out against the CBDC, but what are they for? They're anti-CBDC, which is digital serfdom. They're for Bitcoin, which is digital freedom, okay? And so now you can be for something rather than simply against, and you have essentially a Bitcoin-backed local state government, right? Where this is the move against the feds. And then the question is, okay, will the feds, will the Fed try, or the little Fed, try to shut down FedWire and ACH and other access to these banks? Will they cut off Florida? Will they cut off Texas? I think that's probably a bridge too far. If they did do it, it would show the potential financial totalitarianism incipient in a CBDC. If they didn't do it, well, the fiat rails would be open. And the reason I think something like this is going to happen is it's the next logical step after, for example, El Salvador adopting Bitcoin, mayors adopting Bitcoin, because right now you have the government going and fighting Coinbase and Binance, and that's government versus company. A company doesn't necessarily have enough hit points to fight a government, but another government does. You see in Pacific Rim, to fight giant monsters, you needed giant robots, right? So if you have a state like Florida and Texas with a lot of hit points that is now, that can't go easily bust. That's got a lot of credibility and reputation. And if you have a lot of red and purple states that share their order books, their USD BTC order books, that is now something which keeps the USD BTC window open, allows exit from the system, benefits local states because they can accumulate digital gold, builds upon the existing shall not be infringed, DAO language, minor language, mayors accepting Bitcoin, El Salvador as a sovereign currency, and finally can be internationalized because Nayib Bukele held a meeting of, I think, like 44 small countries, bankers, and have been planting seeds about, what it's like to transition your country over to a partial Bitcoin standard. So you also have this happening globally where small countries like, Palau, for example, that are pro-crypto could do this, okay? If that happens, if the digital gold window is reopened after Nixon closed the gold window in 1971. At the same time, by the way, that China is a totally different animal and they're moving oil and other transfers over to the petro yuan. The biggest difference is in 2008, USD was too big to fail. In 2023, it's not. And if it does go down, we don't want China to be that reserve currency. We do want it to be Bitcoin, a freedom currency. And I think that actually the moves that I'm describing, that is like the positive vision of the future. If this system is going to go down, let's have an orderly exit. If you think that the Fed isn't simply piloting in the wrong direction, but actually crashing the plane, how do you make your way to the parachute? And I think that parachute, that exit, is BTC. Of course, you might have a different opinion. You might go and get gold. You might get oil. You might do other kinds of things. That's, not financial advice for people to decide. But I do think that will end up being the Schelling point. I may be wrong, but that's my thesis on why I think we see exit from the US banking system towards Bitcoin over the next weeks and months and perhaps years to come. The exact timeline of 90 days, I don't think it's impossible that happens given how fast digital bank runs happen, but directionally, it's much easier. Timing is hard, prepping is easy. Prep for essentially, just like you prep for COVID and prepping earlier was better. If lockdown came in 42 days after some of the initial reports of COVID in the US, who knows how quickly digital lockdown comes. This Fed now is dropping in July. So before that happens, build the exit to Bitcoin, build the exit to other kinds of things. And I think we have potentially a positive vision on their side.